Let's turn our attention back to crypto. Ryan's got a lot to say about that, but certainly we've seen some big declines on that front. Bruised crypto market. Bitcoin down 25% in the past month, and we've seen, can we call it the carnage now?
Oh, yeah, I would say so.
Coinbase this morning reporting layoffs, 18% of their workforce, saying that they simply grew too quickly. That comes on the back of two announcements we got. BlockFi laying off 20% of their workforce yesterday. And then on Friday, we had Crypto.com coming out and laying off about 260 workers. That's about 5% of their workforce. And there is a common thread in all of this, whether it's Coinbase or BlockFi, saying, look, we grew so quickly over the last 2 years. This is the time to focus on profitability. Hence the layoffs.
Yeah, and you go down the line. I mean, even some comparatively smaller but still relatively big name projects, Gemini, 10%, Mercado Bitcoin, 12%, Bitso, 10%. I mean, this is widespread throughout the crypto community. And I think that this speaks to, first of all, the macro picture, right? I mean, every single one of these announcements, I think, mentions deteriorating market conditions or something about the macro, which is not disingenuous. I mean, when you look at what's going on with Bitcoin, a lot of that is because of the contraction of this easy monetary policy that has oftentimes led to an excess of liquidity that people put into whatever's yielding the highest, which appears to be, in this present moment, a lot of these crypto projects. So this is part of that deleveraging that I think even Ryan was talking about. That's happening everywhere. But I think because the Bitcoin and crypto community is so leveraged, it's going to be even more pronounced in that space.
It's worth noting again, because we talk so much about the declines, but just how quickly the declines have happened. In November, Bitcoin was trading at $68,000. That was the high. Mm-hmm. And today we're talking below 23,000. If you look at Coinbase, 370 roughly at the high in November. You look at where it is today, 49.67. So these are big losses that companies are seeing. And that's, the results of this is really not just the layoffs, but a big pullback in expansion plans.
Yeah, and I think that, a lot of people might be looking at this and saying, oh, what does this mean for the labor market? Are we already seeing, in the aggregate, this is still relatively small. It's tough to say, well, people are getting laid off in the crypto space, so the unemployment rate's going to rise to 5%.
No.
At the same time, though, what it does speak to is that this specific industry, which, as you mentioned earlier, was such a bastion of growth, right? A lot of these companies are still relatively early in their corporate lives. I mean, even though obviously Crypto.com has enough money to sponsor an entire stadium in LA.
$700 million.
It's a lot of money.
It's worth mentioning again, by the way, 20-year naming rights.
Well, and Brian Armstrong buying a $133 million house at the end of last year. But look, at the end of the day, these were high growth companies that were probably really excited to have all these extra staffers on the boat so that they could build out new revenue streams, continue to grow their companies. Not all of them are cash flow positive right now. They're now having to reverse all of those plans. And, you do wonder about what is that going to do to innovation in this space? It's not to say there won't be more NFT projects coming in 2023, but it does say, look, there's a contraction happening here that's more than just about the staffing. Maybe some of that innovation starts to come out too.
Well, and Brian Armstrong saying that, to kind of summarize, that this could last for an extended period, that we're entering a crypto winter, which we've heard over and over, but certainly not something they're expecting a turnaround overnight.